Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Let's get right into what is happening in the markets today. A bit of a red day on the board today. So we're going to go through what happened in markets today. Canola was down $6.30 at settling at 701.70. It did make a new high today. We'll talk about that closer to the end of the video here. Minneapolis wheat down 1.5 to 609.5. Kansas wheat down 8.5 to 532 and 3/4. Chicago wheat down 11 and 3/4 to 531 and a quarter. Soybeans down 12.5 at 1045.5. Corn down 14 and 3/4 at 454.25 or 454 and a quarter. Sorry, and the Canadian dollar is a little bit lower than it was at the end of last week at 72.36. We're not going to talk too much about beans and corn today. I think, relatively large losses in those markets today. We're recording this prior to the crop condition report coming out from the USDA. And I think the market is pricing in quite a advancement in seeding progress. Neither of those crops are going to get their conditions reported today, but the seeding progress is the one that the market is likely following, and why we're probably seeing some losses there. I think the days available for field work this week were pretty darn astonishing, even up here in Canada. So in one sense, that's a good thing. We want to get the crop in the ground. You need to make a living. Can't do that without putting the crop in the ground. But when we do start seeing it, come in well ahead of average, it does kind of put some weight on the markets. So without further ado, we do want you to subscribe to our premium reports. Yeah, I don't know what to say about them. They're great. They're only $99 a month, which is less than $1,200 a year. I don't know what kind of other subscription service you can get for that kind of cost. We focus significantly more on the Canadian view, particularly the Western Canadian view of a lot of these commodity markets. So that's who we're looking for in our group of clients here. So go to CanadianAgMarkets.com to subscribe. You can cancel at any time, and we probably won't try to sell you anything else either. I say probably because I'm a promoter at heart, I guess. But let's get into some of the wheat markets, and we're going to start with the bearish markets first, and we're going to talk a little bit more about the bullish ones at the end. So just bear with us here as we go through these, less than stellar market action pieces today. We saw some large losses in wheat today, starting in Europe as the Euronext, or as many of you may know it as the Matif wheat market, fell about 2.5% in trade today. Conditions in many areas of Europe and the Black Sea have been quite dry. However, the 7-day forecast has much needed rain coming into the forecast, which, along with U.S. growing condition improvements, are creating weakness in this European wheat market. It was kind of the shoe that fell first this week. Here you can see, and I'm just going to turn on my trusty laser pointer here. This is a map of Europe here. You can see that there's rain coming into the south. We do need rain in the north here. So this northern area of Germany is still dry. Poland is still dry, although we do see some rain coming in here, a half an inch or so. And then here's Ukraine over here. That is in need of some really good rains, and there is some coming in there. This is the European model as well. I'm going to show you the GFS just in case, because the GFS puts a little bit more moisture into this thing. So here's southern Russia, for example. This, Ukraine, southern Russia, Romania here is set to get a lot of rain as part of this system that's moving through the south of Europe. So overall, the conditions are improving there. They improved there a little bit last week, and there's rain coming into the forecast as well. Here's the GFS ensemble, and focusing more on Russia and the Black Sea region. Here is Ukraine over here, and then that southern point of Russia. And this northern area of Russia here has actually been pretty dry. So Ukraine, northern area of Russia has been dry. The southern area of Russia, not as bad, but they're getting rains as well. So, and much more than the European model is predicting. Here's that Romanian rainfall on the west side of the Black Sea as well. So overall, I think we're seeing weakness in the European wheat because of some of the condition improvements there. Chicago wheat, we also saw some larger losses, although basically what it did was just erase the gains that we saw at the end of the week, which took us up to the 20-day moving average. So we are seeing maybe some technical trade here. There has been some large short positions built into wheat here, so there might be some expanding on that. Friday's trade could have been some profit taking and some position squaring ahead of the weekend. And then today they saw that back down. So we saw large losses in Chicago wheat as well. Here's the GFS for the United States. You can see that there is some rain coming into the southern and western area of Kansas here, which is beneficial. All of Oklahoma, almost all of northern Texas is expecting rain. Lots of wheat grown there. Wheat grown here in Colorado as well. So and then up here, some of the softer wheats are grown in the Pacific Northwest area as well. So all those areas are getting rain. I think we're going to see condition improvements in the winter wheat again today. And I think the market was, potentially pricing some of that in as well. Here's the Kansas wheat chart. Similar, very, very similar to Chicago. We saw a good day on Friday. Again, probably some profit taking on short positions, position squaring ahead of the weekend, just to avoid, the unknowns and things like that. So both of those winter wheat classes are trading pretty much lockstep with one another at this point, although we did see the Kansas wheat market take a little bit smaller as a percentage of losses today. Minneapolis is a bit of a shining star of the bunch in the wheat complex, although the losses that we're seeing today, still hung on to most of the gains given in this market on Friday. Again, Minneapolis has a small acreage coming, just over 10 million acres in the U.S., maybe bigger in Canada, although that might be changing around a little bit as well because we're getting good planting conditions here in Canada as well. So that may move around, some acres, or at least put maybe some of the canola acres that we thought were lost back into the mix, etc. So that's that. Okay. Last bear market chart I'm going to show you today, I promise. Here is crude oil into the end of the day. It did actually close higher than its open, but still lower than Friday and still well below the $60 mark. OPEC Plus is set to further speed up oil output hikes, spurring concerns about more supply coming into a market that is clouded also with uncertain demand outlook due to the ever-changing trade relationships that are occurring across the world. This article in Reuters today, is more of an opinion piece, but this author did state that the 8 OPEC Plus countries that are, party to voluntary output cuts met on Saturday. So they met on May the 3rd and decided to ease their curbs again for June, this time adding back 411,000 barrels per day into the mix. So the June hike will take the total combined increase for April, May, and June to about 960,000 barrels per day, which represents about a 44% unwinding of the 2.2 million barrel per day cut that was made earlier. So that's why the crude oil market is seeing steep losses recently as well. OPEC is deciding to open up the spigots and are doing so at a faster pace than originally anticipated. All right, July soybean oil. That oil market does continue to put pressure on the vegetable oil markets. Here's July soybean oil just to give you a flavor of what that looks like. We did see soybean oil come down and test the 20-day moving average today. Hasn't really broken any major technical signals that would suggest that it's in a full-on bear market at this point. Still looks overall kind of strong. Canola for sure is, seems to be immune to all of the weakness that we're seeing out there in the commodity markets. At least for now, we have outlined probably ad nauseum the reasons for canola's rise due to the tight Canadian supplies. Today, July canola ran up to a new high of $714. So that breaks the previous $711 $60 contract high that much of the market had been watching. Canola did fade into a loss on the day though, which signals we are moving, or at least it feels like we're moving into more of a pricing equilibrium perhaps. At least there are still those in the market who are willing to sell canola futures at these levels. So we haven't seen a big explosive move to the upside yet as a result of a shortage Not that I'm saying that's a guarantee that that's going to come, but I know that there are some that are expecting that. One thing I did want to talk before we to cap it off here is this July NOV canola spread. Like normally I display this canola calendar chart as a line graph, but today the intraday action was actually quite interesting. We saw the NX spread rise to its peak of 55.60. That is a contract high intraday, and then it faded to values below the end of last week. So this spread still looks healthy. It's a very large spread still. Um, and this still looks bullish as a bullish input towards canola when you have an inverse this large in the market. However, today's price action in this spread does kind of put a small dark cloud in an otherwise bright blue sky, or, to put it another way, maybe some of the canaries in the coal mine here are starting to get a little bit of a cold or starting to cough a little bit. So we just want to keep our eye on that because it could be an early warning sign. But it's one of the only ones at this point. So I'm not overly worried about it at this point, but it could turn into something bigger at some point if that spread decides that it wants to unwind. All right. On another note, on Wednesday of this week, Statistics Canada will release its March 31 stocks report, which should give us some indications as to just how much grain was left in commercial holdings at the end of March. I've been asked to submit some numbers to Reuters for their survey. We should see some of the details on said survey tomorrow. We also didn't want to wait for the USDA crop progress report in order to release this video. So that's coming, in about an hour or so from when this is currently being recorded. So we'll update you on the USDA crop condition ratings in tomorrow's video as well. So thanks for tuning in. Have a great day. We'll see you again tomorrow.